Welcome to this Fingraphs podcast on Dukascoin TV. Today we're going to talk about cryptocurrencies and especially about Bitcoin and Ethereum. We'll start with Bitcoin with this investor's view. The investor's view on our Fingraphs platform is a combination of a weekly graph with 1 point every week and a perspective over the next few quarters, a daily graph with 1 point a day for the perspective over the next few months, and an hourly graph which gives us the perspective over the next few weeks. What we can see with Bitcoin is that at the moment all three trends are bearish. The weekly graph has started to correct late last year, quite a volatile correction up to now. It is still holding a crucial support which is around 35,700. I mean, we did dip slightly below it last year, but we're still working above this support at the moment. If we do make it below these levels, we could then expect a substantial reversal to the downside for Bitcoin. If we look at the daily graph, and we'll come back to it in a zoom, we can see that we've had a first leg down, some kind of a counter reaction, and that we seem to be moving lower again. Our targets are below 30,000 in the 20,000s if we do accelerate, and we believe crucial support is probably towards the bottom, which held pretty much in late January, so also around 35,000. Finally, if we look at the hourly, it's in a downtrend, and this downtrend could extend a few more days, maybe a week or so, and will come down to pretty much this 35,000 mark, and we will see then if Bitcoin can hold its support. As promised, we are zooming on the daily graph. We could see a first leg down from November into late January, a counter reaction which looks very much like an Elliott wave ABC, and now a new downtrend which may be starting to materialize. We can see that if it does, that means that if it does break below these levels in January, which are around 35,000, we could then drop below 30,000 and possibly into the 20,000, 27,000, perhaps even below 20,000 over the next few months. What we could also note is that the risk index was quite low here, has rebounded and is now resuming lower, but is not oversold yet, which does leave us some leeway for further downside also over the next few months. We look also at Ethereum, which is very similar, also started to correct in November, came down into January, also a very nice counter trend here, very much an ABC, and now starting to resume lower. We could also see that the risk index is not oversold yet and is also rolling over again, so there's some leeway to the downside in terms of risk. And if we look at our targets, obviously also as with Bitcoin, we probably have very important support around the levels that were made in January, so around 2,000, 5,000, maybe 2,000, 4,000. If we do break below these levels, we could make it down below 2,000 and possibly down to 1,500, perhaps even lower. It's also interesting to look at both cryptos compared, so Ethereum versus Bitcoin. We could see a very similar pattern with the first leg down into January, an ABC correction up, and it's taking time to resume lower, but if the correlation of the ratio is sustained with both cryptocurrencies, we should see it also resuming lower. It does seem like Ethereum here is the high beta play versus Bitcoin. Finally, to summarize this, if we look at all three, if we look at both cryptocurrencies, if we look at the ratio of Ethereum versus Bitcoin, if we look at the mini S&P future, we have a similar pattern. Some have started to stall before the others, meaning Bitcoin and perhaps Ethereum, but all seem to have reached at least what we believe is an intermediate top. And this intermediate top is fueling some correction also on the S&P 500, which was very overbought last year. Its impulsive targets to the upside had been achieved, and we believe that it could continue lower. Such corrections usually last 9 to 12 months, and we believe that there's substantial risk on the S&P 500 probably into the fall. We can measure that risk probably towards our envelope here, which is around 3,500 on the S&P 500, which would lead the ratio down to 0.04, which could lead Ethereum down to 2,000, and Bitcoin possibly down to 2,000. So not very enjoying prospects for risk assets in general, meaning crypto as well as the mini S&P future. And if if we look at the daily, the resemblance is even stronger. And we can see in all of these, a first leg down into January, a bit of a retest into March, a bounce into March, and then we're also resuming lower. You can see this on Bitcoin, on Ethereum, on the ratio, which is a bit lagging here to the downside, and on the mini S&P future, which may be leading the pack lower. With a first move down into late January, also some kind of an ABC here, irregular, a bounce, and then a new move lower. So that's it for today. Quite bleak prospects, I'm afraid, but understandable in the context of the war in Ukraine, lockdowns in China, and a Fed which seems adamant to raise interest rates to fight inflation. I wish you a very good week of trading. Thank you very much.